Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, publisher of the Mayne Report, founder of Crikey and shareholder advocate.
And we are
The Money
Café.
Alan,
G'day, Stephen.
morning after the budget.
Morning
Now,
after.
I'm going to let the listeners in on a scoop. We have a scoop, which is Alan's first hot take on the budget. You have not done anything anywhere as we sit here at 9:30. You've had 14 hours to digest it.
Actually,
what do you think?
I think it's probably the first time in, 40 years that I haven't had to write about the budget on the day of the budget.
On the night, yeah. So you were able to go to the gym this morning. You could sort of chill out last night, watching a bit of Netflix. You know,
It's exactly what I did.
what a relaxing night.
So I've got nothing to say about the budget.
Come on.
Oh,
You've looked at every other commentator from James Thompson down. What do you like?
Well, it was a bit of a nothing budget, right? I mean, it was, James Thompson, our colleague in Money Café, was pretty damning and said it was mediocre. And I guess he was in the lockup yesterday, so he's had a good chance to look at it, unlike me. But it looks that way to me. I tend to ignore all the forward estimates. I think they're all pretty meaningless, really, because who knows what's going to happen. But so what matters, in my view, is the coming year that the budget is about. The budget's about the 25-26 financial year. They budget in, whatever it is, May or April usually, for the following financial year, and that's what this is. They have the forward estimates for 4 years, but really, that's kind of meaningless. The next financial year, the deficit for the year, the 25-26 year in the MyEFO, which was last December, the most recent estimate of the deficit for that year was $46.9 billion. It's now $42.1.
For next year.
That's right, for 25-26.
Yeah.
So the deficit has been reduced from MyEFO.
The forecast deficit.
Forecast deficit, that's right. Yes. But that's really the only meaningful thing in the budget.
Yeah,
it seems to me, and they've reduced the deficit from 46.9 to 42.1 billion by 12 billion in extra windfall gains from extra taxes, mainly
from working Australians.
Mainly from working Australians, but also from working iron ore companies.
Yes,
and they are spending 7.2 billion of that on stuff, to win the election.
Well, I'm going to come up with a different number and say that I think it's very disappointing that the budget position is going to deteriorate by 43 billion this financial year based on the latest numbers. So in 23-24, the final outcome was a $15.8 billion surplus, like the second surplus in a row. And this year, last night, they predicted the final outcome for this year, 24-25, is going to be a deficit of 27.6 billion. So that's a deterioration of 43.4 billion, which is the biggest ever non-crisis deterioration from one year to the next in the federal government's position. So if you go back to 07-08 GFC, there was a surplus of 28 billion in 07-08, which finished up as a deficit of 31.3 billion after the GFC. So that was a deterioration of 59 billion one year to the next. And then, of course, you had COVID, which you can't really count COVID because it blew the budget by literally 250 billion. That was the cumulative deterioration over those 3 years. So if you take COVID away, this is the second biggest year-on-year deterioration in the overall surplus to deficit position. And I can't see the crisis or the recession or the commodity crash to justify that.
Have you worked out how much of the deterioration is due to what they call parameter and other variations, that is to say economic factors, as opposed to policy decisions?
Well, it's a range of things. It's the tax cuts, stage 3 tax cuts which have come in. There's quite a few election bribes and stuff. It's a range of small things which overall add to a quite large and cynical, I would argue, pre-election cash splash overall. That said, there's no particular measure in the budget you can point to. Jim Chalmers is very competent. I've been listening to his interviews. He's right across the figures. He'll make a good Prime Minister. He's set to replace Albo. They're in front in the polls. This is a good political budget. They're not sending us broke. So
when do you think he'll replace Albo?
halfway through the next term, I think, would be the logical
Right.
play. He is their best performer, I think. I mean, he's just a very solid, moderate, centre-right guy. And the tax cuts are good. The $17 billion tax cut is giving back 2 years of bracket creep. When working stiffs are copping a hit of $340 billion a year, it's a massive over-reliance on individuals. And, of course, we should get bracket creep back. So I really think it's a good move to cut the...
Yeah, but it's not much of a tax cut.
It's 2 years of bracket creep they're handing back. I mean, they should just hand it back every year.
Of course they should. And they should index the tax scales.
Correct. Yeah.
That's right.
Anyway, look, I also thought the crashing tobacco revenue, it is just stunning that it's going to fall from another 8.7 to 7 billion. This
and they don't know what to do about it.
Well, they haven't fixed it. It's down 57%. I mean, this has been one of the most lucrative organised crime hits on a sophisticated Western democracy. I mean, their market share is into the high 30s, 40%. And they're making billions of dollars. And the forecast is for it to continue crashing. And they still won't admit that the tax rates are so ridiculously high that it's a failed policy.
Is organised crime's market share of tobacco, of cigarettes, 30 to 40%, is it?
Well, I mean,
Is that right?
it peaked. It peaked at like 16.3 billion in tobacco tax revenue in 2019-20, and this year it's down to 7.1. So that's more than half. That's a 57% reduction, and there hasn't been a 57% reduction in smoking rates. In fact, Jim Chambers is saying, "Oh, well, it's two issues. Less people are smoking." I'm not sure that's right. I don't think less people are smoking since 2019. We've always had one of the lowest smoking rates in the world. It is a fact that organised crime have gone from single-digit market share to 40% thereabouts, and they're blowing up tobacco shops all over the country, and they are making out like bandits, and it is a national disgrace.
Do we know why they're blowing up tobacco shops?
Well, it's all part of paying protection. So if you don't pay the protection, and then it's rival gangs. So it's the Coles and Woolies of tobacco blowing up each other's supermarkets if they don't, agree to be a participant of what particular cartel or whatever it is. So
amazing.
It is just embarrassing.
Yes.
Now, what else did you like? Anything in the budget? I mean, I quite like the non-compete move. And I was going to ask you, have you ever, the changes to the non-compete laws, so anyone who's earning less than $175,000 cannot be locked up if they set up a rival hairdresser shop down the road, for instance. So I was going to ask you, have you ever been locked up with a non-compete, or have you ever locked anyone up on a non-compete, Alan?
When we sold Eureka Report and Business Spectator to News Corp, we were on a 4-year earn-out. So, we were stuck working for them for 4 years, but it wasn't kind of exactly a non-compete. And anyway, does anyone get locked up with a non-compete when they're earning less than $175,000?
Oh, all the time. You can't pinch the customers. You can't. If you set up your rival plumbing business, when you sign on, you say you will never compete with me for 3 years. You won't pinch any of my customers. So it does restrict competition. I mean, I had to sign a 4-year non-compete when I sold Crikey, and that wasn't earn-out related. That was just I was not allowed to set up a competing email newsletter with more than 500 recipients for 4 years. But that was fair enough.
That was fair enough, isn't it?
I got $1 million. I thought that was a good deal.
So would this new law banning that?
No, because all that's corporate transactions.
Right.
This is more to do with employees.
Yeah.
Earning less than $175,000. So the Productivity Commission recommended it. I like it because there's too much restraint of trade at the tiny end of the market,
It's not exactly
employees.
It's not exactly a budget measure, though, is it?
Well, it's not. But Chris Richardson on 7:30 last night said this was his favourite measure in the budget, and it will have long-term productivity-enhancing benefits.
Oh, there you go.
So I thought.
Well, if Chris says it's good, then it's okay with me.
Yeah. No, exactly. Now, Alan, before we get on to questions, I had a couple of little name and shame things I wanted to mention related to a couple of things, the AGM season. But the first one is Iluka Resources. Last 3 years, I've asked them questions at their hybrid AGM in Perth. They've now gone to a physical AGM this year. So they are a dinosaur. They've got 27,000 shareholders, no controlling shareholder. And they've just said, nope, this year it's a physical AGM. And I just think it's appalling because normally you only get the billionaires doing this, like Kerry Stokes and Jerry Harvey, to have a normal, non-controlled top 200 company saying you have to travel to Perth to participate in our AGM after 3 years of good debate. I just think it's appalling. And I've got
Is this specifically to keep you out?
Well, I've asked questions at the last 3 AGMs.
So obviously it is.
That's
They're
right.
just trying to keep you out.
Yeah, that's right. But I just think if this takes hold, then it will dramatically reduce access for shareholders at AGM. So, and I've got another little funny one. There are 2 80-year-old billionaires who refuse to say how old they are. And one of them is the chairman of Worley Parsons, John Grill. And I emailed them this week and I said, can you just confirm John's date of birth in 1945, and they came back and said, we're only confirming that John was born in 1945. We're not going to give you a date of birth. And I'm like, why? And that's all we're going to give you. So for some reason. And then Alan Wilson, the outgoing chair of Reece, he's worth $3 billion. I emailed them and I said, can you please confirm if he's 82 or 83? And the head of investor relations came back and said, quote, I will not be providing personal details about Alan. That's just his date of birth.
So you're being ageist, are you?
Well, I just want to talk about people over 80 who are still in power, because I think it's an interesting thing with Rupert and Biden. So I sort of tracked this globally, and I've just come across these billionaires who refuse to say how old they are. I mean, Reece won't even publish their constitution on their website. So Reece is a very quirky, secretive private company.
I plan to still keep working after 80. Are you going to get stuck into me when I'm 80?
I think it's a great thing. I mean, Buffett's 94. He's still going strong. I think it's great. I mean, even Len Ainsworth, the founder of Aristocrat, he's 101. He's still going.
No, but he's not running the company anymore.
No,
is he?
But he's got a funny thing in his agreement with his 7 sons. If they sell any of their Aristocrat shares while he's alive, they have to give him 80% of the proceeds. And he actually took one of them to court. So they're all waiting for him to die.
His sons?
The 7 sons. And then once he does die, there'll be about $5 billion worth of Aristocrat shares that'll hit the market because the kids are finally free to sell without having to pay an 80% capital gains tax to Dad Len.
I presume that Len will leave his money to the cat shelter, not his children.
Well, yeah. So it is funny looking at the rich list, though. I mean, can you believe that the Australians' rich list came out last week, right? Gina Reinhardt and kids, $60.7 billion net wealth for Gina, the Reinhardt family. Twiggy and Nicola Forrest, $31 billion. Clive Palmer with his trumpet of Patriots ads, $22.3 billion. That's $114 billion for 3 families just from WA iron ore. Meanwhile, the state has a debt of still $40 billion plus. Talk about oligarchs running the show.
Yeah.
Undertaxed oligarchs.
Right. Now we're going to talk about Trump during the questions, right? We've got a few questions
Lots
about
of Trump questions.
Lots of Trump questions. Before we go to questions, here's a quick word from our sponsor.
People are always trying to create wealth, but protecting wealth is just as important. Secure your financial future for yourself and your loved ones with life insurance, the essential safety net for your legacy. Head to investsmart.com.au/life-insurance for an easy free quote on life insurance options. Simply share a few details about your situation to get a range of plans and prices.
Okay, Aaron says, hi, Alan and Co. For the last few years on this show and in the AFR and other media, I keep hearing about the concerns of the hollowing out of the ASX by companies going private. Big piece in the AFR on private equity growth, but also that most Australians invest in property over shares and the effect of that on productivity. Why would a business subject itself to the pain and emotion of daily share trading and big reporting obligations unless it was desperate to? So has any country ever tried a deliberately slow exchange? Something like trade only 1 week each quarter with reporting only twice per year. Crikey, Aaron, this is
sort of a half-baked public company model, isn't it?
Well, I don't think that's going to happen, Aaron, really.
No, I mean, the beauty of public markets is liquidity and transparency and price discovery. So you can get out immediately. You can liquidate your asset on full information, and there's a large number of buyers and sellers, and it's highly transparent. Every day the investors are valuing what the business is worth. So You can run an argument there's too much red tape, and that private companies can take a long-term view. I think there's something in that, and the thinning out of the ASX, where more and more companies are going private.
I don't think reduced liquidity is the way to go somehow.
No. Look, I agree. I think public markets are fantastic. But look, I did look. There's a study that ASIC have recently put out, because ASIC's doing a review of whether there's a problem with the shrinking of the ASX, and they said, look, the value of listed entities in Australia has doubled in the last 10 years to $3 trillion. The value of government bonds has tripled in Australia in the last 10 years, from 570 billion to 1.5 trillion. So that's federal government, close to $1 trillion, states, 500 trillion. And the value of private equity funds has increased from 28.5 billion to 65.9 billion. So that's not a massive increase of private equity funds in Australia. And the value of private credit funds is only up from 600 million to 3 billion. So all this talk about private credit is taking over. It is still relatively small, even though people are having conniptions about it. But
good to know, Stephen.
Private markets are okay, but public markets rule. We love them, and we just want more companies to float.
Yeah. Okay.
David says, thank you, Alan, for your thoughtful and prescient ABC article. It reminded me of the musical poem, The Revolution Will Not Be Televised.
So he's talking about my column on Monday, I guess.
Yes. Are we in a time of a paradigm shift in global politics and economics? Should our politicians be prioritising discussing how Australia will fit into the new scenario? Is this not one of the two biggest issues by far confronting Australia? The other dominant issue is housing costs and the associated exponential dominance of the top 1%. They will own an ever-increasing percentage of all the assets of the country. So you probably should talk a bit about your Monday column, Alan, and the big issues, the big strategic issues, and how Australia just, muddles along, boring elections.
I talked about what is known as the Fujiwara effect, which Victor Schvetz of Macquarie keeps going on about. But and what it really is about is Fujiwara effect refers to when cyclones merge, and I'm saying that there's a number of kind of geopolitical cyclones going on. One of them is the descent of America into some kind of autocracy. Who knows how that's going to turn out, but it's certainly not going well at this point. Climate change, which is sort of galloping along, and net zero is not going to happen. And the third is the automation and robotics revolution,
which China is dominating.
China is now dominating, right? So these are big things going on in the world. I think and I was kind of pointing out the debate in Australia tends to be small, and I'm also we seem to be heading into a minority government. I think that seems to be clear. Now, the last time we had a minority government in 2010, it was pretty simple in the sense that there were two blokes who had the balance of power, Rob Oakeshott and Tony Windsor. And they didn't really kick up. I mean, it was a very stable minority government. Lots of legislation was passed. This time around, there's going to be a lot more independents. They're all over the place, a lot more Greens. I think it's going to be much less organised, more chaotic, less clear, less ability for whoever's in charge to provide decisive leadership, I think.
Well, I agree it won't be a majority government, but I don't have the same bogeyman fears of minority government. These are common all around the world. People have to work together. The Teals, the crossbench, they're not stupid, they're sensible. They'll simply guarantee supply and confidence to one side or the other. They'll get a few little policy and electorate bribes as part of the agreement. Things like the Teals will demand a ban on gambling ads, that sort of stuff. I was interested. Jim Chalmers yesterday, he's sort of on this theme. He said there are 5 seismic changes that Australia has to navigate. And the first one he said was the shift from globalisation to fragmentation. I found that strange. I mean, I don't think the world is fragmenting. I would have thought globalisation is absolutely baked in. China is the largest trading partner of 150 nations. Just because there's a little bit of nationalism popping up here and there and some tariff talk doesn't mean the whole global system is fragmenting, as Jim Chalmers is saying. Well, I mean, what do you think? How big a wind back are we seeing with globalisation?
Well, it depends what happens with Trump, but the chairman of HSBC, whose name now escapes me, said yesterday that the era of globalisation is over. There's a lot of people saying that. I think that certainly free trade is not going to be... Well, trade is not going to be as free as it was, clearly. It depends a bit on what Trump does on April the 2nd. He said that there's going to be a whole lot of reciprocal tariffs. If he actually does that, and then there are retaliatory tariffs from other countries, then trade could seize up to some extent, and that would lead to potentially a recession and very bad stuff. But look, I think the world is changing to some extent as to whether it's fragmenting. I agree with you; it's a bit hard to tell now.
Yeah, I mean, I think there is a chance that this Trump thing just passes. You just sit him out, and it just passes, and then Americans are apologising and grovelling for the next 20 years and saying that'll never happen again. A bit like the GFC, where everyone just thinks it's the end of the world, and then maybe you wrote a column at the end of the GFC saying, well, that was a lot of hot air, but at the end of the day, it was a 10-week liquidity crisis. That was at the core of the GFC, and things got nationalised and printing money, and everyone sort of overreacted, and so I think maybe there's a chance that we're overreacting here, and the Trump storm will pass, the guardrails will hold, and we're still living in a globalised world. So Netflix, I mean, is every country going to develop Netflix, or are we going to continue to all be watching YouTube and Netflix and Facebook globally?
And also Facebook and
how do you unscramble
WhatsApp
the globalised highways of the world with the internet?
No, you're
and
right.
tech? You can't unscramble that.
That's true.
So,
Peter says, how much was James sane-washing Trump's economic agenda last week, inventing some sense out of the chaos? Trump has shown no real interest in balancing the federal budget. The Doge and Pony Show is tinkering around the edges. Seems likely to cost more than it saves. The faux argument from Bessent, Besant and Lutnick are the opposite of what they called for in previous roles. Don't preemptively give Trump credit for a well-thought-out economic strategy when his career has been transactional enrichment and aggrandizement, says Peter. That's not really a question.
Yeah, but I do agree that it's not all about balancing the budget. When the biggest thing Trump wants to do is continue his massive tax cuts for the rich that he did in term one. I mean, if he was going to balance the budget, he'd be putting taxes up.
He's going to worsen the deficit for sure.
Correct. It's already 7% of GDP.
And it's going to get worse.
And it's $36 trillion of debt, the US, and he's just looking to shrink the size of the government because he hates the government, he hates institutions, but he's not going to, I agree, he's not going to change fundamentally the size of that ridiculously large deficit. And the Chinese have got a 10% of GDP deficit as well. So the two biggest economies are running massive government stimulatory deficits, which aren't going to change anytime soon.
That's true. And now Germany's doing the same. That's right.
It's a deficit-driven world, isn't it?
It is.
So Justin says, there's been a lot of comments and opinions on Trump's plans for the economy. I understand he's a polarising figure. However, I suggest listening to the All In podcast where they interviewed Treasury Secretary Scott Bessent. He provides a clear overview of tariffs, income tax reductions and cost cutting, and how the government plan to use them and their intended consequences of the US economy. And Justin's saying, listen to it directly rather than just relying on the mainstream media. Well, I mean, I think the point about the tariffs, Alan, is that it's basically just a shift to a consumption tax from income tax. That's sort of the play. But it's a massive increase in inflation and it's a massive slug on Americans buying stuff.
Yes, that's true.
And it will cause a recession and dramatically slow global growth and global trade. So it's bonkers.
Yes. No, I think so too.
Yeah.
I agree.
So do you think what's he going to do on April 2? Do you think he's going to be disciplined by the markets, or is he going to go full Monty with his tariff reveal on April 2?
I think it's going to be a bit of a damp squid. I think he's probably going to not do anything like what he's been foreshadowing. I think it'll be a few extra tariffs and not that much. But look, who knows? Trump is entirely unpredictable.
And have you ever received something hot that you weren't meant to get, like Jeffrey Goldberg being included in that Signal chat
Wasn't
about
that fantastic?
the Houthi bombing campaign? I mean, It's just phenomenal. It's just extraordinary. I've never seen a story like. No journalist will ever get a bigger leak than that. That is the biggest leak in history to a journalist. I mean, have you ever got anything accidentally and had a great scoop?
No, I'm afraid not. Did you? Have you?
No, no one can compete with that. But
No.
and no one will get sacked. It seems.
Sandy says, last week's podcast mentioned borrowing money to buy shares that do not pay dividends to maximise tax advantages. Unfortunately, there would be no tax deduction. Interest is only allowed as a tax deduction if there is assessable income being earned. For example, dividends in assessable income. Second point, an investor can borrow up to 75% using a margin loan against shares such as BHP and CBA. The margin depends on the market liquidity of the company's shares. As Alan pointed out, the problem of borrowing to buy shares is the volatility and the high interest rate. However, there is no stamp duty, unlike property. Again, not a question but a comment. Thank you very much, Sandy. Yes.
I agree. Take that as a comment. Richie says, why are people talking about the valuations of shares still being too high in the US and Australia? And then Richie has sent through various graphs showing the PE ratios for the US and Australian markets, showing that the PE ratios are historically at very high levels despite the recent pullback. So, Alan, do you buy that case that we could still, based on excessive multiples, we could still yet see, a correction, 10% move to a bear market, 20%?
Yeah, of course. I mean, the PEs are very high. They're the sort of level at which markets pull back. I mean, I don't think there's any reason for a crash. Share markets come down if there's a recession, especially, and if there's a particular slowdown, and especially if there's stagflation, high inflation, low growth. So that looks like happening to some extent. So I think that this year's going to see a lower. I reckon the share market, both in America, globally, and Australia, will be lower at the end of the year than it is now. As to how much lower, I have no idea. But
I agree, and I do think there is downside risk on earnings, both from tariffs, geopolitical uncertainty, recessions, and regulatory attacks. Like, governments don't like big corporates anymore, and I think it's quite difficult for the really, really big, powerful corporates to keep expanding their margins. So,
so Richie gave us lots of graphs.
Yes, he did.
Well,
and he's right. I mean, basically his thesis is right, but we all know that in a crisis, governments can print money and put interest rates to zero, and if that happens again, like during the GFC and during COVID, well, that then makes earnings multiples, at this level appear defendable.
Kevin says, you mentioned the power of compounding. You should check out the famous story of Grace Groner. Google her. She bought 3 shares in Abbott Laboratories, her employer of 43 years, for $180 US in around 1936. She died in 2010, aged 101. She reinvested the dividends for the whole period and died with the shares worth around $8 million. Created her own charity, Grace Groner Foundation, to fund education. Well, there you go. Yes?
Kevin, I Googled Grace. It is true. And the story is that it's the power of time in the market and the power of compounding. But you, bottom line, have to have a great long-term growth story company that you're invested in. So she worked there for 43 years. It's a global pharmaceutical powerhouse now trying to shut down our PBS, and all the shareholders have made out like bandits in Abbott and many other big US and global big pharma companies.
It helps if you live to 101.
And you have no kids, and you can just pump it. You can just compound the lot.
Is that right? So, Grace Groner had no kids.
Yes, that's right. So and did 43 years at the company. But no, it's a great story of patience, compounding, and backing the right company. Now, Steve says a lot of talk about what indicators would cause Trump to pull back on the disruptive policies he's putting in. He's a little over a year behind Mr. Milei, the president of Argentina, who is rolling out a disruptive set of changes in Argentina. Milei's been able to inflict significant short-term pain on Argentina under the premise of long-term fix of structural problems, all while maintaining popular support. putting the differences between the two countries aside, do you think Trump is more committed this time around because of the results of other reformist regimes like Milei's in Argentina? Now, I actually went to an EGM yesterday or 2 days ago, Ronan Resources, and they raised $6 million to develop a coal mine in Colombia. And the chairman said, well, actually, the Colombian government's sort of gone all climate and anti-coal, so we need a change of government in Colombia in 14 months' time to a Milei-style Argentinian regime.
He said that, did he?
He said that. And then we think that we'll be able to develop our coal prospect in Colombia, but for now we're just off looking at other deposits in other places.
Did he mention that they're going to work on a coup now?
No, but So look, Milei, apart from handing Elon Musk his chainsaw at CPAC and facing corruption charges over some of his crypto plays, he is an old school Kenneth Thatcher austerity guy. So he's slashing the government and encouraging business. So if you've got a coal deposit in Argentina, Milei's giving you a big tick and saying, go for it. And he's just trying to ginger up the economy. But you can't in any way compare Argentina to America. They're just incomparable. America's the reserve currency of the world.
But it is true that Trump is more determined and better prepared this time than he was first time round. He had 4 years of Biden to sit back and prepare with all the Project 2025 people. And they are well organised, they're serious.
I don't know that they're well organised, Alan. I would say that they are hateful and they hate the government and the institutions of the government. They have a big enemies list and they're one by one going through undocumented migrants, anyone who was in the Democrats, any law firm who ever attacked them, the bludgeon Europeans, the bludgeon Canadians. I mean, you name it, they're just going after everyone except Russia. So it's quite perplexing.
Manny says, in light of good practice to diversify a portfolio and the pending banning of fixed interest hybrids to the retail market, typically in banks with franked dividends, what has the InvestSmart Investment Committee discussed as an alternative? And what can existing holders plan for? I sent a web chat question through the platform and was advised it was under discussion with no decision timeline. Well, I don't know. I mean, I think we are coming. I think InvestSmart is coming up with a alternative to hybrids.
Because ASIC has smashed the $40 billion hybrids market. Yeah.
So InvestSmart's got a portfolio. I remember it being discussed at the last investment committee.
Yeah.
There you go.
Are you on the investment committee?
I am.
At InvestSmart?
Yes, I am. And we did discuss, it was laid out before us, there's a portfolio designed to replace hybrids. So, yeah.
And I think you also interviewed Jeff Wilson recently.
I did.
On Intelligent Investor, and he's doing something similar with his new listed investment company.
He's got a new fund that is also designed to replace hybrids.
Now, Manny says, with a push for high-density living, have there been any studies on the exorbitant strata levies that are being charged and their impact on cost of ownership over a long period of time as compared to a detached home with only council rates? Many people are disinclined to buy an apartment liable for as much as $10,000 a year in strata levies, no matter how close to their work and CBD entertainment. Well, $10,000, I don't think there'd be too many strata bills at $10,000. But look, Four Corners did this great expose last year. Linton Besser, the new host of Media Watch, took out all these cowboys in the strata management sector because it's state managed, state regulated, and it's a joke and it's a disgrace, and the kickbacks they get from insurance companies, which can be 20% of their revenue, is a disgrace, and that's now largely been banned. So yeah, strata can be expensive. People have been getting ripped off, but I don't think it's a case for not buying an apartment. You've just got to have a good, solid, competitive tender process and find yourself a competent strata manager, of which there are many.
A friend of mine's moved into renting a posh apartment. He told me that the strata fees, or body corporate fees, $60,000 a year.
$60,000.
Yeah.
It must be very posh. You must be talking a multi-million-dollar in a very flash suburb.
Unbelievable.
You obviously move in very, highly regarded circles, Alan. That is a ridiculous amount of money.
Yeah.
But then again, if you were borrowing $3 million to buy a $5 million place, your interest bill is going to be, what, $250,000 a year?
Maybe it was 16,000.
Yeah, well, anyway.
I don't know. Kevin heard your confusion on the podcast. The UK pension works on national insurance contributions, NICs. Workers pay 10% of wages and employers pay 13%. This pays for the pension and the healthcare system. You need 35 years of contributions to get the full pension of £221 per week. Everyone gets the same.
Yes, I think that point was just that I think there was some discussion last week about why are rich people getting the pension in the UK? And the argument is, well, if you've paid in, as everyone has, then you automatically get it. So it's an entirely different system to ours.
Yeah.
And they've had a lot of defined benefit, literally pension schemes in the past. And by now they should be very jealous of Australia's magnificent paternalistic compulsory super system, which has given us a $4 trillion pile of cash, which makes us a global heavyweight, attracting companies to Australia. James Packer and Paul Keating are currently making a documentary to sell the Australian super system to the US. God save Australian super compared to the clunky old school English
Stephen,
system, which is hopeless.
It's not exactly a $4 trillion pile of cash because it's in a whole lot of different super funds, and the money inside each super fund is owned by each member of those funds. So there's no kind of big lump of $4 trillion that can be invested. I agree that if you add it all up, it adds up to whatever it is, $4 trillion.
Well, I was amused looking at the revenue breakdowns in last night's budget. So for 25-26, superannuation funds are only going to provide $25 billion. So it is on $4 trillion, it is a very low-taxed model compared to the poor working stiffs who are going to pay $350 billion in tax, and the company tax is $140 billion next year. And just even diesel tax alone is $17.8 billion. That's almost as, where super's only $25.5 billion. So it's ridiculously undertaxed, and it's a tax shelter, but it's a hell of a capital pile that makes us a powerhouse globally.
Very true, Stephen. Great to see you. Thanks, everyone, for listening to today's episode of The Money Café. I'll be back next week with James Thompson. Send in your questions to The Money Café at eurekareport.com.au, and James and I will answer them. Till then, I'm Alan Kohler, founder of Eureka Report, finance presenter and columnist for the ABC.
I'm Stephen Mayne, contributor and intelligent investor, founder of Crikey, shareholder advocate, and we'll see you in a fortnight.